Welcome back to the Digital Ledger. I'm DJ, and today we're talking to the people sitting right on the pressure point in 2026. CFOs, controllers, finance chiefs, and the ones expected to step into those roles next. And look, if you're feeling like the old finance playbook is running out of road, you're not wrong. Jeremy, that's what we're seeing, right?
It is, DJ. For a long time, finance earned credibility by closing the books cleanly, reporting accurately, and explaining variance after the fact. That still matters. It's just not enough anymore. Now the expectation is, don't just tell me what happened, tell me what happens next, what it means for cash flow, and what decision we should make because of it.
Right. And for the audience, that's not just a mindset shift, that's a behavior shift. If your team meetings are still backward looking, if your reporting stops at variance, you've got to start redesigning that now. Because the role isn't bookkeeper anymore, it's value integrator.
Exactly. And that's not branding. That's operating reality. It changes who you develop, what systems you invest in, and how boards should think about succession planning. If you're preparing finance leaders for 2026, there are 3 pressures you cannot ignore.
All right, let's break it down. And as we go, let's make this actionable. What should people actually do differently starting now?
First, automation. We talk about transformation like it's happening everywhere, but the reality is messy. Manual close work, spreadsheet reconciliations, disconnected systems are still everywhere. Some FP&A teams are spending 15 to 20 analyst days each quarter just reconciling data. That's a huge drain.
So here's the move for listeners. Don't ask, what have we automated? Ask, where are humans still stitching systems to get there? Because if people are acting like middleware, you don't have automation. You have hidden manual work.
Exactly. Partial automation without integration just shifts the burden. And if your successor inherits that, they'll spend their time chasing errors instead of advising the business.
So, practical step, map your close process end to end. Find where data gets touched more than once, where reconciliation happens manually, and prioritize integration over adding another tool. That's how you free up leadership capacity.
Second pressure, sustainability. A lot of leaders still treat ESG like a side report. That's changing fast. It's becoming a requirement, a license to operate. Regulations are forcing companies to treat sustainability data like financial data, structured, controlled, auditable.
So here's the gut check. If an auditor walked in tomorrow and asked you to prove your ESG numbers, could you? If the answer is no, you're behind.
Exactly. The question is no longer, what should we promise? It's, do we have the systems to deliver and prove it?
And for the audience, start integrating ESG into your core reporting now. Don't wait for compliance deadlines. Tie sustainability metrics to financial outcomes, margins, risk, cash flow, so it actually drives decisions.
That's critical because investors are changing too. They're focused on long-term financial value. They want to know, does sustainability improve performance, reduce risk, protect cash flow?
Which means your job is to connect the dots. If you can't explain sustainability in financial terms, it won't land. So build that bridge now between climate data, capital allocation, and investor communication.
That leads to the third pressure, investor expectations. They're more technical, more segmented, and less patient with vague narratives. And with $900 billion in sustainable bonds maturing soon, refinancing decisions will really test the market.
So what do you do with that? You get sharper on your capital story. Understand what investors actually value, not just what sounds good. Be ready to explain why your sustainability strategy holds up under financial scrutiny.
Exactly. Investors are showing preference for clear, project-based green bonds and more caution around vague future targets. So future CFOs need to understand capital markets, not just compliance frameworks.
So let's be clear, succession planning here isn't an HR list sitting in a folder somewhere.
No, it's a leadership and operating model issue. If your function is still manual, siloed, and backward-looking, you're not building future leaders. You're training excellent historians.
Yeah, and nobody needs more historians right now. They need decision makers.
Exactly. The leaders who advance will combine discipline with judgment. They'll have controls and credibility, but also the confidence to say, here's the risk, here's the impact, here's what we should do.
So let's get practical. If I'm listening right now, what capabilities should I be building into my team?
5 key areas.
And here's the move. In your next reporting cycle, don't let your team present numbers without a recommendation. Make that a rule. That's how you build this muscle.
Second, AI fluency. Not hype, real usage. Use AI to improve data quality, forecasting, and workflows.
Start small but real. Pick one workflow: forecasting, reconciliations, variance analysis, and apply AI to reduce manual effort. Measure the time saved, then scale. That's how you make it stick.
Third, data integration. If your data lives in silos, your leaders will stay stuck in reconciliation.
So prioritize integration projects that eliminate duplicate work, not just ones that look innovative. If it doesn't reduce manual effort, it's not the right investment.
Fourth, audit-ready control. With rising regulation, traceability and controls are non-negotiable.
Ask your team one question: could this stand up to audit tomorrow? If not, fix the process, not just the output.
And fifth, executive presence. It's what determines trust under pressure.
Give your high potential leaders exposure now. Let them present to senior leadership, handle tough questions, because that confidence only comes from experience.
Exactly.
Let's talk operating model, because none of this works if your team is buried in month end chaos.
Right. You need a grow or go mindset. Identify work that creates value and eliminate or automate the rest.
So here's a move: track where your team's time actually goes. If a big chunk is data prep, that's your opportunity. Standardize, automate, and shift that time into analysis and decision support.
And that's why succession planning and modernization have to be linked.
Exactly. You can't build future leaders in a broken system.
So build around role readiness and system readiness together. Cross-train people, give them exposure, and measure leadership behaviors.
Meaning, can they turn data into decisions? Can they connect strategy to financial outcomes? Can they lead through change?
And can they align incentives and capital allocation so strategy actually drives behavior?
That's the part people miss. If it's not tied to money, it doesn't move.
Exactly. What gets measured and funded gets done.
So here's the takeaway: modernize your data foundation, reduce manual work, make your reporting audit ready, and deliberately build leaders who think like advisors, not reporters. Because that's the finance function you're going to need.
Appreciate it, DJ. Great conversation.
And thanks to all of you for listening to the Digital Ledger. We'll be back soon with more to help you stay competitive, compliant, and trusted in what's next. Jeremy, see you next time.
See you next time, DJ. Bye, everybody.